Welcome back to the CryptoWorld channel, everyone. My name is Josh, and right now the total crypto market cap is seeing a perfect retest of this importance level of support. And just a few hours ago, we had the March CPI data officially get released, which updates the official year-over-year inflation rate of the US dollar up to 8.5%. So I'll be covering all of that and so much more later in this video. But first, let's take a quick look at the 12-hour Bitcoin chart. And at the time of recording this video, technically speaking, the short-term trend on the 12-hour time frame is still pointing in the bearish direction. But obviously, for those of you that have been watching my videos over the past 1 week, you will know that I've been comparing this price action to the price action that we saw at the beginning of March and in the middle of February. Basically, a bearish trend in the Bitcoin price that lasts for a couple weeks on average. And so far, at the time of recording this video, from top to bottom, we've been in this more bearish trend for almost exactly 2 weeks now. So this has actually played out very well. And as I mentioned in my last video that I posted yesterday on the channel, the 12-hour Bitcoin RSI entered into oversold territories just yesterday. And this is just a sign on the chart telling us that some sort of bottom is coming sometime soon. But if you're taking a look at these previous examples where the 12-hour Bitcoin RSI entered into oversold territories, the moments that happened back on the 21st of January and also the 21st of February, the Bitcoin price in both of those examples saw a very small bounce, but then we had one more dump to the downside in both examples. And so after the RSI initially entered into oversold territories, the Bitcoin price ended up forming one more lower low, but the RSI on the other hand formed a higher low in both of these examples, which is obviously forming a bullish divergence. And then of course that was a stronger bullish signal on the chart for a trend reversal in terms of these short-term bullish and bearish trends. So when you're talking about the 12-hour Bitcoin chart, nothing much has happened since yesterday. And as for some levels of support, we have this 50% level coming in just underneath $40,000. But more importantly, we have the golden pockets coming into play at around $38,000 per Bitcoin. And you can see back here at the end of February and the beginning of March, we saw a lot of support in the Bitcoin price in around 37,500 up towards 38,000, which is right where that golden pocket is sitting. So this is definitely an important area of support to pay attention to moving forward. And on top of that, when you're zooming out to the daily Bitcoin chart, we have this ascending line of support coming into play at around 39,000. And as I mentioned multiple times yesterday, this is a very important level of support alongside that golden pocket, because while the Bitcoin price is remaining above those levels of support that I just mentioned and still forming these higher lows on the daily time frame, we're still looking not too bad. In terms of the larger price structure, this multi-month long trend, technically speaking, ever since the January bottom, the larger trend has been a bullish trend. And then of course, we've seen some short-term bullish and bearish trends throughout this larger bullish trend over the past couple months. But going back to what I was saying yesterday, if the Bitcoin price breaks below these important levels of support that I just mentioned, then this larger price structure on the daily time frame, this multi-month long trend, is beginning to shift in the more bearish direction if we see a confirmed break below those levels of support, which we haven't just yet. But this is a potential risk to be aware of, because when you zoom further out on this same daily time frame, this bullish trend that we've been in over the past couple months could technically play out as a massive bear flag if we break below those important levels of support that I just mentioned. But once again, at the time of recording this video, the Bitcoin price has not seen a confirmed break below this support just yet, which means this possible bear flag has not been confirmed. It is still technically in this formation phase. But in terms of my personal Bitcoin strategy, I am using this bearish price action as an opportunity to accumulate some more Bitcoin just by dollar cost averaging. And if the Bitcoin price breaks below those important levels of support that I just mentioned, I will not be selling my Bitcoin. But in that more bearish scenario, personally, I'll be looking at accumulating a possible low leverage short position just as a hedge against my Bitcoin holdings, because obviously in a more bearish scenario, my Bitcoin holdings would be losing value, but in a short position, I'll be profiting off bearish price action, basically canceling each other out. But it is important to mention two things. First of all, I want to make it clear that it's in the bearish scenario if we see a confirmed break below those important levels of support that I just mentioned, which right now we haven't seen just yet. And the second important point to mention is the fact that that is not financial advice. That is just telling you my personal Bitcoin strategy, what I'm looking at on the charts. And obviously it is only up to you to come up with your own Bitcoin strategy. But what is really interesting is if you're taking a look at the total crypto market cap, this is all of Bitcoin, all of Ethereum, and all of every single other altcoin out there combined. And right now, the total crypto market cap is sitting at just above 1.84 trillion US dollars. And we have this important level of support coming into play at around 1.8 trillion US dollars, which which was previous resistance. So for as long as the total crypto market cap can hold above around 1.8 trillion, then this bearish price action that we've experienced over the past 1 week was basically one giant retest for this breakout to the upside. But ideally, for the total crypto market cap to start flipping more bullish again, we need to see the daily RSI and the daily MACD start flipping more bullish again, which right now, technically speaking, they're still pointing in the bearish direction. So basically, the total crypto market cap is right now in a deciding moment because we are running into some important support, but the short-term trend is still technically bearish and we have not confirmed a trend reversal just yet, which is why it is extra important to keep an eye on those levels of support that I just mentioned. And now taking a quick look at the US inflation rate today, which is coming in at 8.5% year over year. And if you're looking at the US inflation rate over the past 100 years worth of history, right now we're basically sitting at around a 40-year high, because the last time that inflation was this high was back in the early 1980s. So this is definitely a big deal. And you might be wondering, what does this actually mean for crypto? And well, when we see high inflation, that basically means the dollar is losing purchasing power. So we see the price of goods and services increase against the dollar. And so basically high inflation of the US dollar is bullish for just about everything paired against the US dollar. So that goes for the prices of goods and services, for real estate, for the stock market, for crypto. But you have to remember that markets are forward thinking. So it's the moment we start seeing this high inflation starts kicking in, that is when we see the majority of the bullish price action occur. So this chart right here shows us the past 5 years worth of inflation data. And basically this massive spike in inflation started in around the end of 2020. And if you're looking at the end of 2020 on the Bitcoin chart, that was right around this area just here. So once again, the moment we started to see the inflation rate get out of hand, that was when the markets began to price in this high inflation, and we saw a massive run up in crypto prices and also in the stock market, real estate, and many other financial assets. And I've seen a lot of people wonder why Bitcoin is not pumping right now, even though we have extremely high inflation. But once again, you have to remember 2 things. First of all, the inflation rate that we have right now basically tells us the inflation that we've had over the past 1 year. And the second important point to mention is the fact that markets are forward thinking. They do not price in what is happening right now. They price in what is likely to occur in the coming months or even up to the coming years. Because, for example, ever since around November and December, the markets have been pricing in interest rate hikes, which are designed to reduce inflation and are technically more bearish for the markets. But when the Federal Reserve hiked interest rates last month, we actually saw a pump in the Bitcoin price, even though it's technically a bearish signal. Because remember, the markets try to price in events before they happen. Because the Federal Reserve first started hinting at interest rate hikes back in around November and December last year. So we had all of this time where the markets were pricing in these interest rate hikes. And then the moment we got our first interest rate hike of 25 basis points, the market pumped because that was what the market was expecting. And so what is the market expecting right now moving forward? And to answer that, if you're going off what Jerome Powell said in the last Fed meeting, he expects inflation to continue to head higher up until around the middle of this year. So maybe around June, July. And then he expects inflation to slowly decline after the middle of this year. And then going into 2023, Jerome Powell expects inflation to cool off quite a lot more. And if everything Jerome Powell says goes to plan, and so basically if the market gets what it expects, then that is a bullish signal for the market. Because remember, once again, just last month, even though we had a 25 basis point hike, which is a bearish signal for the market, because the market was already expecting it and had already priced that in, the market pumped in the coming weeks. Because if an event like that plays out as expected, whether it's bullish or bearish, the moment it plays out as expected, that is bullish, because it reduces uncertainty from the market, and the lower the uncertainty, the more bullish markets are, and the more uncertain markets are, the more bearish they are. So basically, if the US inflation rate keeps going higher up until around the middle of this year, and then starts cooling off back to the downside going into the end of this year, then that is more of a neutral to bullish thing for the markets. But if we diverge away from that, so basically if we see what we were not expecting, then that is when we could see some more bearish price action on the larger scale. And if you want to get real-time updates just like this, then make sure to follow me over on my Twitter, and the link to my Twitter is in the description down below and also in the pinned comment. And right next to my Twitter, you'll find a link to my brand new Instagram, where I will be posting some more content over there as well. But anyway, if you found this video useful or simply enjoyed this, please make sure to leave a like down below. And if you're new to the channel, make sure to subscribe with notifications turned on for more updates just like this every single day. And before you click off, if you want to make more money in crypto, whether or not prices are going up, down, or sideways, then these two videos popping up right here on your screen are definitely made for you. But anyway, that is it for this update. I really hope you enjoyed, and I'll see you all in the next video.